When I was in my early 20s, I had no interest in financial education and have never thought about investing. I got married at 27 years old and had started work for about 2 years. At some point, we have some savings and have never thought of growing the money. We simply leave the money in the bank and save about $200 a month in some endowment plan recommended by my financial advisor. I seriously thought that was enough. Then 2008 came. The global financial crisis struck and the stock market tanked. The economy was bad. Many people got retrenched. My wife and I were fortunate that our jobs were safe. One day, my wife mentioned that, hey, the stock market is down so much. Maybe it's time to take a look. I really don't know what to do and how to do it. So I asked my mother-in-law, who has far more experience than me. She recommended her broker to me and I opened an account. During that time, I got to know my friend Andrew. He was a banker back then. We played tennis regularly and he would share some investing ideas with me. I was really intrigued by the companies that he shared and I kind of followed him to invest in certain companies. The results were very good. All this led me to the rabbit hole of learning to invest and making money in the stock market. Hi, I'm Joel, a teacher working in Singapore. I make videos on productivity, personal development, and lifestyle hacks. If you love this content, do consider subscribing to the channel so that you don't miss any videos. Long story short, this year I'm 42 years old and have been through more than 10 years of investing. I've dabbled in buy and hold, dollar cost averaging, short-term trading, and trading options as well. I have made money and I have also lost money. I don't have $1 million portfolio to show you like other YouTubers, but I want to share the message that at some point, you'll have enough money saved up where you'll think, wow, I should probably invest this somehow. I've compiled a list of 10 compelling reasons why you should invest in the stock market. I'll go through below and I'll offer my 2 cents on why stock market investing may be so effective. Now, all information shared here is for education purpose and should not be taken as investment advice. You can implement this at your own risk and after consulting your financial advisor. Are you ready? Number 1. To grow your money, buy stocks. The most basic cost to invest and is frequently at the heart of why people buy stocks is to grow your money. When done right, you can grow your money you invest by anywhere from 7 to 10% per year over the long term. If you invest $10,000 in the stock market today and it gains roughly 7% per year, you will turn that $10,000 into almost $20,000 in just 10 years. Think about that. Imagine 10 years ago, you put $10,000 into an account, invested it in some stocks, made some trades, and now 10 years later, you have your original $10,000 plus another $10,000. Or imagine a longer term example where you are both a good saver and a smart investor. Imagine you invest $10,000 of your savings into the market every year for 30 years. That is $10,000 this year, another $10,000 next year, another $10,000 the year after that, and so on for 30 years. So in total, you have invested $300,000 in stocks over 30 years. And let's assume you have achieved the same average yearly returns we used above, 7% per year. So we have invested a total of $300,000 over 30 years. But guess how much you have made? You know it's going to be more than $300,000 you have invested over 30 years because the money will have grown in the stock market. But it's how much it's grown that's truly surprising. That $10,000 investment per year for 30 years would now be worth more than $1 million. The most important point is that investing in the stock market can make your money grow much larger over time. And that's the number 1 reason why people invest in stock market. Reason number 2, invest in stocks because they always go up in the longer term. Overall, stocks have tended to rise over the last 100 years. Yes, there have absolutely been nasty crashes like the 2008 global financial crisis, pullbacks, and periods of bad performances. But overall, stocks have performed a steady march upwards as the US and the global economies have grown. While there are ups and downs along the way, the market has generally trended upwards. And if you bought stocks and held them for decades, you have made a lot of money. In fact, just $1 single invested in the shares of small companies known as small cap stocks in 1926 would be worth nearly $40,000 today. Many people invest in stocks simply because the odds are in their favor over long term. Reason number 3, utilize the power of compounding. I showed the power of compounding a bit above, but here's the basic concept. If you earn a good steady return on your investment, nothing crazy, just a good return, over a long time like 30, 40, 50, 60 or more years, that investment grows way bigger than seems possible. For example, we covered above that how investing just $10,000 per year for 30 years while earning a 7% yearly return turned into well over $1 million. But let's look at an even longer timeline. Let's say you follow that same strategy, investing just $10,000 per year and earning 7% returns per year for 60 years instead of just 30 years. Now, your regular investment of just $10,000 would have grown to an astounding $8.1 million. Albert Einstein once described compound interest as the 8th wonder of the world. He said that he who understands it earns it. He who doesn't pays for it. Bottom line, if you start early, save steadily and invest intelligently, your money will grow in truly amazing ways over time. Reason number 4, invest in stocks because your cash will lose its value. You have probably heard of inflation before, but it's sort of a strange concept. To put it simply, think of inflation as a slow but steady force that makes things cost more over time. I remember going for a movie for $3.50 in the 1980s. Now it costs me $13.50 to go and watch a movie. That's largely because inflation makes the price of products and services go up over time. What that means for you is that your hard-earned money is slowly losing its value over time. That's scary. For example, if you save $10,000 this year and put it under your pillow for the next 30 years, the same $10,000 cash will probably buy you way lesser things. What I meant is that the money won't be worth what it was worth when you first earned it. So if your $10,000 could buy you an incredible trip around Europe, in 30 years, when you take it out from your pillow, it may only be able to buy you 1 week of staycation. Inflation can vary over time, and I'm not going to get into too much detail here. But just remember this, when your money is sitting in cash, it is steadily eroding in value. How fast does it erode? That depends on the current rate of inflation. Since the year 2000, the annual inflation rate has mostly been between 1 to 4%. That means every year, your money's buying power erodes by 1 to 4%. If you deposit your money at your local bank, the interest is not even 1%. You can't earn enough to avoid inflation. Investing in the stock market could earn so much more. Think of it this way. If you have enough money saved up to tour Europe today, and you put that money under your pillow, in 30 years, you'll only be able to do a staycation. Invest wisely in the stock market, in 30 years, you'll be able to tour Europe and other parts of the world. Reason number 5, invest in stocks because they are easy to invest in. If you are fortunate enough to have some savings, you are faced with a wide range of places to invest your hard-earned cash. You could buy real estate, start a small business, invest in mutual fund, collect precious watches, and much more. What's great about stocks is that they are relatively easy to invest in. All you need is to sign up with an online trading broker, for example, Fidelity, Vanguard, E-Trade, TD Ameritrade, Tiger Brokers, or some local brokerages like OCBC Securities, UOB Kay Hian, etc. So what you need to do is to set up the account, deposit some money, and you're ready to buy some stocks. Of course, I'm not suggesting you follow some YouTubers blindly to invest. there's definitely research to be done along the way to make sure that you are making the right investment for yourself. But compare buying stocks to buying real estate or investing in a small business. Stocks are fast, easy, and cheap to trade, whereas real estate and other investments are not. Stocks are often called liquid assets, which just means that they could be turned into cash relatively quickly. For example, if you had $100,000 invested in the market at 3 p.m. on a Wednesday and you wanted to get all your money out right away, you could most likely turn that $100,000 into cash in a few minutes with just a few clicks, and you'll get your cash. On the other hand, an illiquid asset may take time and money to turn into cash. For example, if you own some expensive paintings, it could take you weeks, maybe months, and likely some money to find the right buyer and sell your painting at a fair price. A lot of people invest in stocks because they feel like their money is never far away and can always be called home in an instant. Reason number 6. Get steady income from dividend stocks. Dividend stocks are great because they pay you real hard cash on a regular basis. Depending on the dividend stock that you buy, it could pay you cash ranging from 1% up to 10% of the total money you invest every year. For example, let's pretend you bought a portfolio of 10 dividend stocks that overall pay a dividend of 4% of your total investment. And let's pretend you have just retired after a long and successful career. So you are comfortable investing $500,000 of your life savings into this portfolio. Every year, that portfolio of dividend stocks would pay $20,000 in cash into your account for just owning them. You can just calculate $500,000 investment times 4% annual dividends. That will be $20,000 per year. Most dividends are paid quarterly or twice a year, meaning that the $20,000 in dividends would arrive a little at a time throughout the year. And that doesn't even account for the likelihood that those stocks will go up over time, which would even make you more money. So this portfolio is like a golden goose where you lay eggs for you regularly. Retirees tend to like dividend stocks because regardless of whether the market goes up or down, they'll receive a steady dividend check or cash credited to their account. Reason number 7. Invest in stocks to have a big nest egg for in retirement. Many people invest in their retirement accounts because they want to have a nice big nest egg to live off when they retire. I want to emphasize this point again and again. If you start investing when you're young, you can build a tremendous amount of wealth for yourself when you're older. If you like to stop working at some point and don't want to simply trust the social security will be there to support you and your family, investing in stocks can be a great way to save for retirement. Reason number 8. Invest in stocks to diversify your income stream. Buying stocks allow you to diversify your income stream. Let me explain. The more ways you have to make money, the less you are at risk from getting in financial trouble if any one method gets disrupted. For example, let's say you have a full-time job, rent out an extra room in a house to an international student, you are also giving tuition on weekends, and investing in dividend stocks. If any one of those sources of income were to dry up, say you lost your full-time job, you fell sick and could not give tuition, you wouldn't totally lose your income because you have diversified your streams of income. The extra room rental and dividend stocks could help carry you through a rough patch. It's the same concept with investing. Owning stocks can diversify how you earn returns on your money. Maybe you've got some money in your company's retirement plan, or saved in a bank account, or invested in expensive watches or wine. Stocks can be another type of investment, diversifying against potential trouble in any one area. Reason number 9. Invest in companies that you love or you have expert knowledge in. When you buy even a single share of a company, you are officially buying a business. If you love Apple products and you buy Apple stock, you are actually an owner of the company. In Singapore, each of us will definitely use one of the 3 banks, DBS, OCBC and UOB. We will definitely visit one of the shopping malls owned by CapitaLand. By investing in these companies, 1. We become part of the owner, and 2. We can get paid from these companies through dividends. Some other examples include companies that we are very familiar with. We use Amazon to buy our things online. We use Google for almost everything, like searching for information, email, maps, etc. We also use Facebook for our social media, and Facebook owns Instagram and WhatsApp. All these companies are listed in the stock exchange, and we can become investors of these companies. Isn't it great? Of course, I'm not asking you to invest in them right now. There are some research that needs to be done. For example, the valuation of the companies, the market conditions, etc. And this brings me to the last reason. You will learn a lot from investing in the stock market. Investing in stocks will teach you a ton of knowledge. You'll learn a lot about the stock market and how companies work, what makes them succeed or fail, how products come to the market, how economies impact companies, and much more. If you study economics in college, this is the time you can apply your knowledge. Plus, you have learned to think in new ways. Investing in stock market requires logic, analysis, and thoughtful reflection. Practicing these skills with investing is sure to sharpen them in other areas of your life. Wrapping up, I shared 10 powerful reasons why you should invest in stocks. In my opinion, investing in the stock market is about learning, having fun, and making money. But there's much more than this. Done right, investing in stocks allows you to use the money you already have to make more money with minimum effort. Let's say you have saved $10,000. How long did it take to save that money? 6 months? 1 year? Or 2 years? Now, what if you could invest that $10,000 in the stock market, do some occasional research and trading, and over the course of 10 years, turn that $10,000 into $20,000? However long it took you to save that $10,000, I'm guessing it was pretty hard work. You were probably trading your time for the money. Investing allows you to make your money work hard for you. Your first $10,000 profits can be earned while you are doing other things. It's also what legendary investor Warren Buffett was thinking when he said, "If you don't find a way to make money while you sleep, you will work until you die." And how fast your money can earn that next $10,000 depend on how good an investor you are. The better you are at buying stocks, the faster your money will grow. Of course, along the way, there will be risks, pitfalls, and challenges. One thing I've learned is that stock market isn't right for everyone. It takes commitment, patience, smart decision making, and steady work to make your money grow over time. Skip out on any of those things and you risk losing money in stocks. But overall, if done right, investing in the stock market is one of the greatest ways to grow your wealth. Let me know in the comment section below, have you started your stocks investment journey? Just type yes or no and let me know. If you like this video, I would greatly appreciate that you hit the like button and subscribe to the channel. That's all for today's video. I'll see you in the next one. Bye!